When the entire issue is undertaken by all the underwriters, we call it as firm underwriting. What is this marked application? Marked application means those applications which bear the seal of the underwriter. In this 9,000, firm underwriting has been included. So we need not bother about adding it back to the total applications. If firm underwriting is considered as unmarked, then I have to add this firm underwriting to the unmarked applications. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to the session 4 on corporate accounting. We'll work out some more problems on this underwriting of shares. Now let us see what is the next problem here. See, in this session, problem 1, Agro Limited issued 60,000 equity shares of rupees 10 each, which were underwritten as follows. Now, there is a company called Agro Limited. It has issued 60,000 equity shares of rupees 10 each. Now, there are 3 underwriters here, B, C and D. Now, B has underwritten 36,000 shares, C 15,000 shares, D 9,000 shares. So, we have the gross liability of the underwriters. So, B has 36,000, C has 15,000, D has 9,000. In addition, the underwriters made firm underwriting as follows. So, B 4,800, C 1,800, D 6,000 shares. So, the total applications received excluding firm underwriting and including marked applications were 30,000 shares. Now, marked applications were 6,000, 12,000 and 3,000 shares. So, prepare a statement showing the net liability of the underwriters. So, this is a problem where we have the complete underwriting. Now, what is this complete underwriting? So, the entire issue has been underwritten. So, what is the total number of shares issued here? The total number of shares issued is 60,000. Out of this, we are having 3 underwriters. So, that is B, C and D. How many shares B has underwritten? 36,000. C has underwritten 15,000. D has underwritten 9,000. So, the total comes up to 50,000. So, 6 plus 5, 11 plus 9, 20, 0, 2, 60,000. So, this is a case of firm underwriting. So, when the entire issue is undertaken by all the underwriters, we call it as firm underwriting. Then, in addition, the underwriters made firm underwriting. Now, we have this firm underwriting. Now, what is this firm underwriting? So, in this firm underwriting, the underwriters, they agreed to take up a fixed number of shares. So, that is, so B, he has agreed to take up 4,800 shares. C has agreed to take up 1,800 shares. D has agreed to take up 6,000 shares. So, totally they have agreed to take up this fixed number of shares. They are saying that they will buy this fixed number of shares. That is what we mean by firm underwriting. Now, the total applications received excluding firm underwriting and including marked applications were 30,000. So, what is the total applications received? Total applications received are 30,000. So, what is the number of marked applications? So, they have told us they have excluded the firm underwriting. So, firm underwriting means it is also an application made by the underwriter. So, how many applications they have agreed to take up? How many shares? 8 plus 8, 16, 6, borrow 1. So, 6, 7, 8, 8 plus 4, 12. So, 12,600 shares they have agreed to take up. Now, for this total applications, I have to add this 12,600. So, I get 42,600 applications in all. So, out of this 30,000 applications, they have not considered the firm underwriting. So, now we have to consider the firm underwriting as applications given by the underwriter. So, that is why I am adding it here. Now, so total number of applications is 42,600. Now, from this, I deduct marked applications. Now, how many are marked applications here? 6,000 plus 12,000 plus 3,000. 6 plus 12 is 18. 18 plus 3 is 21. So, 21,000 are marked applications. So, how many will be unmarked? 21,600 are unmarked. So, I repeat here. See, this is a problem on complete underwriting and the number of shares issued is 60,000. The liability of each of the underwriter is B, C, D, 36,000, 15,000, 9,000. So, total it comes up to 60,000. Now, they have also told that there is firm underwriting. Now, what is this firm underwriting? Firm underwriting is nothing but the underwriter is agreeing to take up this fixed number of shares. So, he is ready to purchase so many shares. So, B is ready to purchase 4,800 shares, C is ready to purchase 1,800 shares, D is ready to purchase 6,000 shares. So, total comes up to 12,600. Now, total applications excluding firm underwriting is 30,000. So, for this I am adding firm underwriting 12,600. I get the total number of applications as 42,600. Now, from this I am deducting the marked application. Now, what is this marked application? Marked application means those applications which bear the seal of the underwriter. So, marked applications, when I add all the 6 plus 12 plus 3, it comes up to 21,000 shares. So, I deduct it. So, 21,600 becomes the unmarked applications. So, we have this unmarked applications, and unless otherwise stated, always firm underwriting should be considered as unmarked only. So, firm underwriting is considered as unmarked applications. Now, we will work out this problem here. So, I write here the statement of underwriters liability, Agro Limited. In the books of Agro Limited, we have the statement of underwriters liability. So, B, C, D total. So, this is the format we have here, and this is the particulars. Okay. Now, first entry will be always gross liability of the underwriters. So, I write gross liability of the underwriters. Now, I write underwriters, UW, I write it. So, let us see what is the gross liability here. 36,000, 15,000 and 9,000. So, I write 36,000, 15,000, 9,000. So, the total comes up to 60,000. Now, from this, I have to deduct the unmarked applications less credit given for unmarked applications. Now, we have calculated here the unmarked applications. How many unmarked applications are there? 21,600. So, how I got 21,600? Total applications 30,000. I am adding firm underwriting 12,600. So, total comes up to 42,600. From that, I am deducting the marked applications. So, I get 21,600 as unmarked application. Now, I write here 21,600. So I have to divide it in this ratio. So this 21,600 has to be divided in this ratio. 36 is to 15 is to 9. So when I simplify, divide it by 3. So 3 ones are, 3 fives are, 3 threes are. So 12 is to 5 is to 3 ratio, I have to divide this 21,600. So 21,600 into 12 by 20. So 2 and 2 gets cancels. Then we can just see here. So 21,600 into 6. So this comes up to, see, 21,600 into 12 divided by 20. So it comes up to 12,960. So 12,960, this is for B, 12,960. Now for C, it will be 21,600 into 5 by 20. So that is 5 fours. So it will be 21,600 divided by 4. 5,400. So I write here 5,400. And then next will be 21,600 into 3 by 20. So this will be 21,600 into 3 divided by 20. It is 3,240. So I write here 3,240. Now we deduct all this. So I get 36,000 minus 12,960. So it becomes 23,040. Then next one will be 15,000 minus 5,400 equals 9,600. Then 9,000 minus 3,240 equals 5,760. Then 60,000 minus 21,600. So this is 38,400. So whatever is the unmarked applications, so I am giving the credit to all the underwriters. So I am dividing it in the ratio 12 is to 5 is to 3 ratio. So 12 is to 5 is to 3 ratio. When I divide, I get the answer as follows. So this is the balance remaining after deducting the unmarked applications. Now next will be less marked applications. Marked applications. Now what are the marked applications here? So we have the figures here. So the marked applications were for B it is 6,000, 12,000 and 3,000. So for marked applications I am writing 6,000, 12,000 and 3,000. So that comes up to 6 plus 18, 19, 20, 21,000. So we deduct all this. I get the balance. So now 23,040 minus 6,000. 17,040. Then 9,600 minus 12,000. This is minus 2,400. Then 2,760. So we have here 17,040 plus 2,760. We get 19,800 minus 2,400, 17,400. Now we have a surplus here for C. Now this surplus I have to share between B and D in the ratio of 12 is to 3. Now less surplus of C shared between B and D in 12:3 ratio. So 12:3 ratio. So 2400 into 12 divided by 15. So I write 2400 into 12 divided by 15. I get 1920. 1920. So I write here 1920 and then 2400 minus 1920. So it is 480. So 480. So this will be, when I deduct this, so it will come up to 17,040. 17,000 minus 1920. 15,120. Here it is nil. And then 2,760 minus 480. 2,280. So this remains the same. 17,400 remains the same because we are just sharing this surplus among these two people. So this remains the same. Now the next step is add firm underwriting. Now I have to add the firm underwriting of all the underwriters. Now what is the firm underwriting here? The underwriters made firm underwriting. So B 4,800, C 1,800, D 6,000. So 4,800, 1,800 and 6,000. So 4,800, 1,800 and 6,000. So total comes up to 12,600. So when I add this, I get the answer as 19,920, 1,800 and then 8,280. So when I add all this, so 19,920 plus 1,800 plus 8,280 comes up to 30,000. So this is the answer here. See, the firm underwriting, in the last step, I have to add all the shares. So I am getting this 19,920, 1,800 and 8,280. So this is how we have to calculate the statement of underwriter's liability. Now we'll go to the next problem here. So the second problem here, Bhavan Limited has an authorized capital of rupees 5 lakhs divided into 50,000 equity shares of rupees 10 each. So 50,000 equity shares of rupees 10 each. The company issued 10,000 shares for subscription to the public. The entire issue was underwritten as follows. So A 6,000, B 3,000, C 1,000. So what is the entire issue? Entire issue is for 10,000 shares. So 10,000 shares has been issued and what is the number underwritten here? 6 plus 3, 9 plus 1, 10. So it is complete underwriting. So the entire issue has been underwritten. So we call it as complete underwriting. And then again they have firm underwriting 1,000, 400 and 200. Out of the total issue, 9,000 shares including firm underwriting were subscribed for. See the difference between the previous problem and this problem you see here. So out of the total issue, 9,000 shares including firm underwriting were subscribed for. So in this 9,000, firm underwriting has been included. So we need not bother about adding it back to the total applications. So if they say that applications are excluding firm underwriting, then we have to add back those firm underwriting applications to the total applications. But here, since they have told including firm underwriting, we need not bother. So, they were applied for, and marked application forms excluding firm underwriting. So, marked applications were 3,200, 2,000 and 800 share. Calculate the liability of each underwriter. So, this is a problem on complete underwriting where we have firm underwriting and also we have marked applications. So, shall we do this problem? So, let us go about this problem here. So, I write statement of underwriter's liability. Underwriter's liability. So, then I have A, B, C and the total. So, A, B, C, total. Then we have particulars. Now, the first entry will always be gross liability of the underwriters. So, I write gross liability of the underwriters. Gross liability of the underwriters. Now, we will see what are the gross liability here. 6,000, 3,000 and 1,000. So, I write 6,000, 3,000, 1,000. So, total comes up to 10,000. So, the entire issue is for 10,000 shares. The 10,000 shares have been underwritten. So, less credit given for unmarked applications. Unmarked applications. Now, if we can see here, what is the total issue? 10,000. How many applications are received? So, the total number of applications received is 9,000. It includes firm underwriting, and out of this, the marked application forms are 3,200, 2,000 and 800. So, this comes up to, when you add 3,200 plus 2,000 plus 800, how much it comes up to? 5,200 plus 800. So, 200, 2,800, 3,000 plus 3,000, 6,000. So, marked applications I am deducting. So, what are the unmarked applications here? 3,000. This becomes unmarked applications, that is 3,000. So, this we have the unmarked applications. I have calculated it as 3,000. So, here unmarked applications total is 3,000. Now, I will divide it in the ratio 6:3:1. 6:3:1. So, this will be 6 by 10 into 3,000. So, this is 6 3s are 18, 1,800. Then again 3 by 10 into 3,000. So, this will be 900. And then 1 by 10 into 3,000, that is 300. So, I am deducting all the unmarked applications here. So, when I deduct this, so it will be 6,000 minus 1,800. So, this will be 4,200. So, this will be 2,100. So, this will be 700. Here it will be 7,000. So, unmarked applications I have deducted. Now, less marked applications. Now, what are the marked applications here? We will see here. Now, out of this, marked applications were 3,200, 2,000 and 800. So, this is 3,200, 2,800. So it comes up to 6,000. Now I deduct this, I get the balance. So 4,200 minus 3,200, 1,000, then 100, then minus 100, then 1,000. Now if I can see here for underwriter C, there is a surplus of 100. So I have to divide it among A and B. So this surplus of C shared between A and B in the ratio of 6:3. So this 100 into 6 by 9 or 1 by 3. So this will be equal to 100 divided by 3. So this will be 33.33. So I will write it as 33 and here it will be, so 100 minus 33 will be 67. So I am deducting this. So 1,000 minus 33, 967, then 100 minus 67, 33. So this is again comes up to 1,000. So the surplus of C I have shared between A and B. So A gets 967, B gets 33 and total is 1,000. Now add firm underwriting. Firm underwriting. Now we have to deduct the firm underwriting. So we deduct the firm underwriting. What is the firm underwriting of A? 1,000, 400 and 200. So firm underwriting of A is 1,000. Then again B is 400 and 200. 400 and 200. So this comes up to 1,600. So when I add this, so I get 1,967, 433, 200. So 2,600. So the net liability. The net liability is 1,967, 433 and 200. So the net liability of the underwriters is 2,600 shares. So this is how we have to calculate the underwriter's liability. Now we'll go to the third problem here. Namur Limited made a public issue of 25,000 equity shares of rupees 10 each at a premium of rupees 2 each. So they have issued 25,000 equity shares of rupees 10 at a premium of rupees 2 each. The promoters took 20% of the issue and the balance was offered to the public. Now what is the total issue here? 25,000 equity shares. Out of this 25,000, 20% has been taken up by the promoters into 20%. So that comes up to 5,000 shares which are taken by the promoters. Now the rest of that 20,000 equity shares, they have been issued to the public. Okay. So 20,000 shares has been issued to the public. The issue was underwritten as follows: Arun 12,000, then Raj 5,000, Sushma 3,000. So 12 plus 5, 17 plus 3, 20. So entire 20,000 shares have been underwritten. So this we call it as complete underwriting. Complete underwriting. Then the underwriters made applications for firm as follows: Arun 1,600, Raj 600 and Sushma 2,000. So this is firm underwriting. Then total subscriptions excluding firm but including marked were for 10,000 shares. So the total subscription, the number of applications received was for 10,000 shares, and marked applications were Arun 2,000, Raj 4,000, Sushma 1,000. So out of this total applications we got for 10,000 shares. Now in this marked application is for 7,000 shares. So 3,000 will be unmarked. 3,000 are unmarked. You are required to show the allocation of liability of underwriters if shares firm are treated as marked applications. So the shares firm underwriting are treated as marked applications. So we have to do. So we'll do the problem here. So I'll write statement of underwriters liability. Statement of underwriters liability. So I have 3 columns here. So we have Arun, Raj, Sushma, and the total. Okay. So we have the particulars here. Now we have the gross liability. The first entry will be gross liability of the underwriters. Now what is the gross liability of the underwriters? So the issue was underwritten as follows: Arun 12,000, Raj 5,000, Sushma 3,000. So it will be 12,000, 5,000, 3,000. So total is 20,000. Now less credit for unmarked applications. So we have already calculated here. Total application is 10,000, marked is 7,000, unmarked is 3,000. Now this 3,000 unmarked I will write here. Now this 3,000 I have to share in this ratio, that is 12:5:3. So 12:5:3 ratio. So 3,000 into, I'll write here 3,000 into 12/20. So this will be 1,800. Then next will be 3,000 into 5/20. This will be 750. Then next will be 3,000 into 3/20. So this is 450. So when I deduct 12,000 minus 1,800, I get 10,200, 4,250, then 2,550 and 17,000. Yes. So here now balance. This is the balance. Then less marked applications plus firm underwriting. Now what is the marked application here? Marked application of Arun is 2,000 and firm application is 1,600. So 2,000 plus 1,600, I get 3,600. Then next for Raj, it is 4,000 plus 600. 4,600. Then for Sushma, it is 2,000 plus 1,000, 3,000. So totally it comes up to 11,200. Now I deduct this. So 0, 0, 6. So 9 minus 3 is 6. Then it is 0, 5 minus 350. Here also it is minus 450. Here it is. So we have the balance here. Next, less surplus of Raj and Sushma. So there is a surplus here. For Raj, surplus is 350 and for Sushma it is 450. So both these surpluses should go to Arun. So 350 plus 450 comes up to 800. So 800 here. So I just deduct this 800 here. So the balance I am getting 5,800. Now the next step, add firm underwriting. Add firm underwriting. So here it is 1,600. For Arun it is 1,600. For Raj it is 600. For Sushma it is 2,000. So totally it comes up to 4,200. So we add both. So I get 6 plus 8 is 14. 7,400. Then 600. 2,000. Then here it becomes 10,000. So the net liability of the underwriters $7,400 for Arun, Raj it is 600, Sushma it is 2,000. So total number of shares is 10,000. So in this way we have to calculate. So gross liability is 12,000, 5,000, 3,000. It comes up to 20,000. You deduct the credit given for unmarked applications. We have the balance, then marked applications, then surplus, then add firm underwriting. So why do we add this firm applications to this marked application? Because firm underwriting has been considered as marked application. I am adding the firm underwriting to marked applications. Now, if firm underwriting is considered as unmarked, then I have to add this firm underwriting to the unmarked applications. Please note this point, students. So, whenever firm underwriting is considered as marked application, you add it to the marked application. And when firm underwriting is considered as unmarked, you just add it to the number of unmarked applications. So hope you have all followed this. With this, we come to the end of this session. Thank you.